I know all of you probably are familiar or almost familiar with the concept of the MACD indicator and how to work with it. But before considering skipping this video, stick around until the end of it because I have a bunch of surprises for you and you won't regret it. In this video, I'm revealing the best strategy that you can use with the MACD indicator. So without further ado, let's get on with the video. If you're a beginner, I highly recommend to watch my previous video on MACD and you can find a link down in the description. But to put it through quickly, the moving average convergence divergence, also known as the MACD, is one of the simplest and yet most popular indicators used by traders. Essentially, it is trend following indicator that shows the relationship between two moving averages. Another quick pause here, if you are not even familiar with the whole concept of moving averages, or let's say dynamic support and resistance, I highly recommend to check that video too, and there are a bunch of other videos which are fundamental for you as beginners in my playlist. Make sure to check them out, the links are down in the description. So first, let's apply it to the chart. What you want to do is go to the indicator section, type in MACD and click on this one here. Now, before we start, we first need to know how does the MACD work. To put it through quickly, we can see here there are four components to the MACD. First, we have these two lines, the MACD line and the signal line. Notice the difference between the two. The MACD line moves faster and is more sensitive to the price changes, which will be the main focus of the MACD indicator. Compare that to the signal line, which reacts slower to price changes, therefore giving it a smoother appearance. Next, we have the histogram, which represents the difference between the MACD line and the signal line. For example, if the line crosses above the signal line, the histogram will turn green, and if it crosses below, the histogram will turn red. The gap between the MACD line and the signal line also affects the size of the histogram. As you can see, if the two lines are further apart, the histogram gets bigger, and if the two lines get closer, the histogram becomes smaller. And finally, we have the zero line, which simply represents the center of the MACD indicator. Now, the way traders utilize this indicator to identify momentum is by looking at the crossover between the MACD line and the signal line. Let me show you an example. If the MACD line crosses above the signal line, indicates that the market is on an upwards momentum, and if it crosses below, it indicates that the market is on a downward momentum. I know that probably lots of you know these kind of concepts and stuff. I'm just pointing out on these for those friends of ours who are a little bit more rookies in the market. Traders can also utilize the size of the histogram to determine the strength of the momentum itself. If the MACD crosses above the signal line while the histogram is getting larger, it shows us that the upwards momentum is getting stronger. Similarly, if the histogram is getting smaller in the size, it indicates that the upward momentum is getting weaker. Now, we've already established that the MACD is based on moving averages, and so the question is, why should you use the MACD and not the moving average? Well, let me give you a quick comparison here. So here we have the MACD that is set to its default settings, 12 and 26, and over here we also have two exponential moving averages which are set to the same values at the MACD, 12 and 26. Notice the correlation between the two indicators. Every time we have a crossover on the moving averages, we also have a crossover on the MACD, but it's between the MACD line and the zero line. But remember, what we look for in the MACD is not the zero line, but rather the crossover between the MACD line and the signal line. And so, as you can see, the crossover on the MACD gave a much earlier entry signal compared to the crossover on the moving average. That's why I prefer it as my momentum indicator. Now let's talk about the different strategies that you can use with the MACD indicator. So first, a common mistake that traders make is that they're using the indicator by itself. Let me show you why it's a bad idea to use the MACD alone. Before that, it really matters that which cryptocurrency exchange you're using. I highly recommend when you want to try any new trading strategy, you must backtest it, or if you don't like backtesting, you can just use demo trading, which is available on Bybit. Previously, I made a video about it, and I don't want to make it so long, so you can check it out and learn how to do it. But here's the kicker. kicker. I have a surprise for you. If you use my affiliate link down in the description, you have the chance winning up to $35,000 worth of USDT just by signing up, doing your KYC, and depositing at least 100 USDT and start trading on it. So what you waiting for? Maybe it's going to be your lucky day. Here we can see that the overall market is in a downtrend. However, the MACD is crossing over upwards. The MACD is indicating a bullish momentum, but the market is in a downtrend. This is exactly why you shouldn't use the MACD by itself, because what the MACD is showing us is only the short-term momentum. And as traders, we also need to take the long-term trend into consideration, because we never want to trade against the trend because we don't have the power and the money to do that. So a simple but high win rate strategy that I recommend for beginners is by combining the MACD with a long-term trend indicator like the 100 EMA. This way, we can safely trade the MACD while making sure that we're staying within the same direction of the long-term trend. This is how you trade the strategy. The first step is to identify the long-term trend by looking at the 100 EMA. If the price is above the 100 EMA, it indicates that the long-term trend is up. And if the price is below the 100 EMA, it indicates that the long-term trend is down. Once you've identified the trend, the next step is to look for crossovers on the MACD that show the same signal as the long-term trend. For example, if the long-term trend is bullish, we only take signals when the MACD crosses over upward. For the risk management strategy, you can place your stop loss at the nearest swing low and set your profit target at 1.5 to 1 risk to reward ratio. For advanced traders who want to increase the win rate using the MACD, relying on crossover techniques alone may not be sufficient. In trending markets, crossovers work well, but in ranging markets, they can give false signals. To improve the win rate, you can combine the MACD with the price action. In this advanced strategy, you choose a time frame and identify a key level within that time frame. You wait for the price to approach the key level and confirm the reversal using the MACD indicator. One trick is to break the chart 2 time frames down and wait for the MACD to cross over downwards in the smaller time frame for an earlier entry signal. By combining the MACD with price action, you can get more precise entry signals and increase your profits. These are high win rate MACD strategies that you can use right now. Now it's time for my surprise for you. Previously, I made 2 videos about the fact that how you can come up with tools better than both MACD and moving averages. And if you want to check them out, don't hesitate. Those are just these 2 videos here. And if you are into more videos like this, and you can also check out my other videos as well. If you found some value to the video, all I'm asking in return is for you to invest 2 seconds of your precious time into liking the video and subscribe to the channel and share my video with your friends. It literally takes only 2 clicks, but it means so much to me. Thank you guys for watching, and I'll see you in the next video.